Hi everybody, this is Ospreyeye from mychartcoach.com, and I want to discuss in this video a little bit about swing points. We posted a video over the weekend discussing trading swing points, and we discussed how it's a three-point system where you're trying to identify the first and second swing point, looking for possible entry on the third swing point. And this is for the basic trading. What I want to show you here how this played out with the current move, the current bullish move. So if you look here, this is the first swing point. Is this candle right here? So this candle right here is the first swing point, and then this candle right here is swing point number 2. So you have down here. So this is a downtrend, and you have a low followed by a lower low. So that's the low of the candle. This is the lower low of the candle. As you can see, it's a closing Marabuzo on this candle. There's no wick, no lower wick. And so Marabuzo means thin hair or bald in Japanese. And so that is a candle to look for at a bottom. And then the third candle, I don't want to get off track here. The third candle here is this is the third swing point. And so this candle right here. And what this candle, as you noticed, has made a higher low. So you had consistently low, 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 and then on the third candle there's a higher low is made. And this third candle right here is the key to take a long position on this setup. So this would have been the if you were looking at SFXE. Okay, and you're trying to think of, this is for swing trading. If you have day trading abilities, you're able to buy and sell throughout the day. But for swing traders, you have to you enter a position and you have to wait. Sometimes 3, maybe even 4 days before you can sell it. So you want to be more sure that you're getting a good entry point. And that what we are saying is entry point is everything. EPIE, remember that. And so if you're looking at this setup here, and thinking about EPI, thinking about entry point is everything. Well, the best entry point, the best entry point would have been on this day here if you would have loaded on swing point 2, but that takes more skill in identifying that this was a bottom, and also it takes more risk because it hasn't been confirmed. And that'll be for when you get into more advanced charting and when you feel more confident in your analysis. You can begin to start taking positions on swing point 2, and that's for more potential for upside potential for larger percentage gains, but also there's more risk involved if you enter on swing point 2. So the key would have been for the safe trade would have been to enter on the swing point 3. And then by entering on this day, you've had Monday and Tuesday were both days that were up days that depending on your account. Some people have swing trade accounts where they can buy one day and then sell the next day. It just all depends on your account. But this gives you more by entering at the beginning of the pattern. The key is by entering at the start of the reversal, then you're going to have more time to be able to exit with the profit. And so that's the whole point. So the point I'm trying to make is if you're looking at SFXE today and you're thinking, oh, maybe I'll take a position today, well, you've already missed the previous 2 days. This is already on a 3-day run. So when I talk about getting a good entry point, making sure that you have a good entry point, especially if you're a swing trader, entering today would not be a good entry point for a swing trader, for somebody that doesn't have day trade abilities, because it's already on a 3-day run. You want to, since you have less room for error, if you were to enter, let's say today, that would be called chasing. You're chasing the stock because it already started down here. Now, for a day trader who can exit whenever they want, or who, let's say, if you enter today and you have the chance to sell tomorrow, then there's going to be less risk. But for somebody, let's say, if you were looking to buy today and you couldn't sell for 3 days, this would be a risky place to buy, because right now the candles are hitting this middle Bollinger Band resistance level. This is a downtrending stock. SFXE is in a downtrend, so it's riding EMA's 4 and 8 resistance lower. and the bottom of the downtrending channel is the lower Bollinger Band, which is this purple line, and the top of the downtrending channel is the middle Bollinger Band. So right now, SFXE is hitting middle Bollinger Band resistance in the top of the channel. So this would be the sell zone for people that loaded down here on swing point 3. So you know, or if you loaded on swing point 2. So that, you know, this is more of the profit taking zone than entering a new position zone. Now, if the middle Bollinger Band resistance level breaks and it turns into support, then that opens up for a new uptrend and a reason to look at it for another long position. But first, the middle Bollinger Band resistance level needs to break. So something to think about. It's all about entry point and about not chasing, because you remember there's thousands of stocks out there. This is just one chart. You know, let's say you miss this one, no biggie. You just try to find another chart that has a setup where you can enter on this third swing point. What you want to do is you want to find this is for reversal patterns, you want to find plays that are just setting up. You want to find it fresh in the pattern. You want to try to get in at the beginning of the pattern. I mean, the best is if you can try to find it where it's dropping and you're trying to find that bottom day. Like right here's another example of the swing points. So here's this is a multi-day drop, and that's the first candle, and then this is the candle number 2, right? And then see this big low. This lower wick right here shows loading off of low day levels. When you have a multi-day drop and then you see a big wick below the lower Bollinger Band, that is another signal to that buyers have stepped in. So this would be the signal to load on day 2, on swing point 2 of the reversal trade, and then you're getting this confirmation on number 3. Now, if you wanted to play it safe and you didn't buy here, this candle here, since it made a higher low after consistently making lower lows, this was telling you that the bounce play was starting. And so yeah, you know, it ended up it didn't head much higher from here, but there was a trade between these wicks here and this EMA 4 or EMA 8 resistance levels, and that's how you have to play it. You want to try to time swing point 2 or swing point 3. You didn't, like, let's say you were playing this bounce here, you know, if you jumped in up here, you were getting in too late. It was already a multi-day run. So my point I'm trying to make is be very selective on your entry points, you know, because that's where you're putting your capital at risk. That's where everything is on the line. That's where you know, it's the difference. A good entry point's difference between an easy trade and making money and being behind the 8 ball from the beginning. And you know, and it also, by getting the good entry point, it takes away the anxiety associated with getting with chasing and hitting resistance and being forced into a position to sell for either break even or for a loss. So and then it's always easier to sell into strength. So by entering on swing point 2 or 3, you're going to be selling into momentum, into upper momentum, and it's always easier to sell when a stock is going up than when it's going down. Okay, so this is just another example of swing points and how to trade them. All right, thanks for viewing this chart, and thanks for viewing this video. And if you like this information, please check out our YouTube channel at mychartcoach.com and at our website at mychartcoach.com. Okay, thank you.